Well, indeed, it's time for us to take a look at our daily interview. And this afternoon, we're talking about payments and interconnectivity within the mobile phone service providers and banks and other services related to that. We're privileged to be joined by George Wainaina, the MD at Kenswitch. A very good afternoon to you and welcome to KTN.
Thank you, Karan.
First of all, let's begin with taking track of where we've reached as a country in terms of interconnectivity between different forms and modes of payment. Where are we as a country?
The national payment system, supervised by the Central Bank of Kenya, began a process of reforming that sector in 1998. Among the key challenges that were presented at that time was that it took a very long time to exchange payments in the form of checks. What the Central Bank wanted to do was to ensure that as a country, we will be able to convert a lot of our payments away from cash and into electronic form. So several initiatives have taken place since then, one of them being the formation of a national switch, Kenswitch, which combined 30 commercial banks to provide a shared ATM and point-of-sale infrastructure. We've seen in 1998 and later on in 2008 and later on in 2009, M-Pesa and other mobile network operators coming on board and providing for an electronic payment. The challenges that we're facing within the industry is currently that those systems stand alone and only serve their current set of customers.
Of what value has this been to the Kenyan consumer?
If you look at it, it's on two fronts. One is in terms of convenience. We are seeing a lot of customers now are more inclined to using technology to perform a lot of the payments transactions. We don't want a situation where people are now queuing to go to banks to access funds during the most productive working hours. That's between 8 o'clock and 5 o'clock. So that is on one front. On the other front has to do with in terms of the cost. If you look at money, there's a cost of printing that cash, there's a cost of moving it and securing it. So from the central bank's point of view, they'd rather a lot of the transactions we moved away from using cash towards using electronic payments.
That they're actually electronic. Now, one concern has been, the services from providers like you, though it's much appreciated, Kenswitch and the rest, the problem has been the cost. If I belong to Bank A and I want to withdraw money from an ATM of Bank B, which is interconnected by, say, Kenswitch, the cost is a bit higher. What do you have to say about the cost? Are we getting any better in terms of making that cost manageable?
The problem was an initial problem where we had banks putting on their own sets of infrastructure. So you'd find a bank has gone out there and rolled out its own infrastructure to serve its own set of customers. So when the business case was done, it was based on how many customers do I have and what is the cost of providing that service. I think the industry is now in a point they need to realize that, for example, an ATM service is no longer a strategic advantage. It's more of a commodity. It's an essential service just like electricity and water. And we've seen some banks have gone ahead and are stopping. They don't even charge for that transaction anymore. So
what are we saying in terms of cost? Is it still more expensive?
The cost, you only get economies of scale if you provide or push more transactions through a central switch. And I think a lot of banks are realizing that as long as they continue standing alone, they don't get those economies of scale, because people look at payments that we are sharing infrastructure, but what we are actually doing is sharing customers. If the entire banking sector was coalesced around a single switch, you'll be talking about 12 million customers, or 12 million accounts. So definitely you'll get the economies of scale. We have also devices that are placed or over-concentrated in particular areas, for example, in shopping malls, and some of those can be moved to other areas which are underserved. And then you get more throughput. The more throughput you get, the more the cost can come down, and this cost can also be passed on to the customer.
Now, there's been some serious, unprecedented competition from the mobile phone service providers. They've rolled out their own, payment solutions and so on and so forth, which definitely has rocked the boat for most banks, so to say. What's been the impact of that to you, and how are you adapting to this new platform that we have in the country?
I think the mobile network operators going into the payment space was one of the best things that could happen to the financial industry as a whole. The banks were very conservative in terms of utilizing technology to provide value-added services to their customers. I think if you look at the core function of a bank is to take in a deposit and lend. So they were always getting money from that particular stream. Now, initially they viewed the mobile network operators as competition because before we had instruments like checks that people are using to make the payments. And besides seeing volumes dropping within the check system and also within the electronic funds transfer systems. So what we have done as an industry is to sensitize the banks and say that this is actually an avenue for you to provide services to your customers using mobile technology. So rather than going and competing with the likes of M-Pesa in terms of person-to-person transfer, the banks should be looking at what our core business and how can we facilitate that through our phone, things that the mobile operators cannot do. For example, if I wanted to get a loan or a credit approval, I should be able to do that through my phone so that it comes back within a relatively short period of time and say, this is how much I qualify in terms of going to the bank, so that when I go to the bank, I already have that message and say, I qualified for this amount of money. And we also speed up the process so that the banks can focus in terms of their core businesses.
You've talked about the banks adapting, but one of the things you've said is that this is one of the best things to happen to Kenya.
Yes.
From your perspective as Kenswitch, how have you been able to adapt into this? What value-added service are people getting from this, your customers?
When Kenswitch started off, we started off with the ATMs at the point of sale. But last year we launched our Kenswitch mobile platform, on which we are rolling out a lot of our value-added services. Like I mentioned to you, one of them is the ability to get a credit rating within 16 seconds. So that I can send a message to my bank, and my bank can tell me this is the amount I qualify for. So as Kenswitch, we are positioning the mobile as a tool to extend the services that are already provided by the banks, that only the banks can provide. We also have a facility where you can move money from one bank to another within 6 seconds. And this is interbank. So what you're saying is that, fine, the central bank is undergoing currently, or there's a check truncation process that's going on that will reduce the amount of time taken to transfer value into an account from using a check down from 3 days to 1 day. But what you're saying is that currently the technology we have, we can do that within 6 seconds.
Okay, finally, tell us about what you think the future of this industry is likely to be.
Well, I think there are several things that are happening. If you look at the mobile phone, there's a lot of penetration within the market, but the internet is catching up pretty quickly because of the fiber optic cables that are now landed within Kenya.
Sure.
So we are seeing a move towards online payments. That will be big. So we're seeing a convergence between all these technologies, what we're calling interoperability, so that for you as a customer, you don't have to shop in different places. We're talking about bringing the payments industry towards a supermarket of sorts, where I can have a one-stop shop by just staying with one particular provider.
George Wainaina, thank you very much for joining us this afternoon. George Wainaina is the Managing Director at Kenswitch.